This video is made only for educational purposes. No stock ETF should be bought without advice from your investment advisor. A few ground rules for a great financial life. In financial life, more than making right decisions, one should also focus more on avoiding bad decisions. There are many people who have been careful and who have not messed up things. They have not lost wealth due to their mistakes or foolish decisions. Such people live a happy and tension free financial life. True, they may not have accumulated a huge wealth. They have not taken awesome decisions, but they have not made terrible mistakes either. We give below a few ground rules which are like pillars for a quality financial life. Ground rule of earning. Do not depend on a single source of income. Create a second or third source of income. Many people just never focus on this aspect. An extra source of income may be a small income, but it provides a huge satisfaction and a cushion from shocks in life. Job or business may be the regular source of income for many. Everyone is gifted with some or other skill in life. Start sharing it with the world in your free time and create an alternate second source of income. Invest your savings thoughtfully. Create a third source of passive income. Ground rule of spending. If you buy things that you do not need, you may soon have to sell things you need. You earn so that you can spend it. Spending is a core activity in life, but there is a difference between spending and overspending. Understand the difference today to make your life more robust tomorrow. Ground rule of saving. Do not invest what is left after spending. Instead, spending after what you save or invest. This is directly related to the ground rule on spending. Saving should take priority over spending. If you do not control your spending, you can never be able to save much and then you will never be able to give your best for wealth creation. Ground rule of risk taking. Never test the depth of the river with both your feet. There is a difference between risk and calculated risk. Calculated risk is the risk which we take after due thought process and after careful evaluation of future consequences. Thoughtless risk taking can lead us to disastrous consequences. If you invest a huge sum of money in stock trading just because markets are going up and you do not want to miss the bus, then you are taking reckless risk. Ground rule of investing. Do not put all your eggs in one basket. If you put all your money in a single asset class or in one property or in a particular branch of your bank or in a single stock, things can go awfully wrong. What it goes wrong, you will cry and there will be nobody to help you. The best practice is not to put all your wealth in one basket. Do remember that portfolio diversification is not a tool for minimizing risk but not for maximum returns. Ground rule expectations. Control your expectations and be in control of your happiness. Many of our great expectations border on greed. If you want to get in control of your happiness level, just to control your expectations in life. In financial life, we expect financial products to give us amazing returns. Limit your expectations of returns on your investments and you will be happy. Above ground rules should support each of our financial decisions as pillars. If you can master these ground rules in your financial life, your happiness and quality of life will enhance greatly. Share, give a like, leave a comment. Please subscribe our channel.